The U.S. consumer is in big trouble, and the trouble is only getting bigger. Hey, everybody, you're watching Bull Boom, Bear Bust, back with another dose of economic reality, BX4 News. Let's go ahead and get right into it, folks. A lot of stuff to get caught up on today, a lot of news. We know what's happening overall with the economy. People had a lot of hope and optimism over the past few months, a lot of optimism, but that optimism is slowly erasing, and not slowly, actually, I mean, pretty quickly. If you look at the last few consumer surveys that came out, some of them have plunged and taken the biggest drop that we've ever seen, nearing all-time lows. And that's because people had this optimism, with the new administration coming in, that things were going to get better, easier, the cost of living was going to come down. None of that's actually happened, folks. So there's a couple areas of relief, a couple possibilities of things getting easier. Gas prices come down a little bit. Egg prices down slightly. For the most part, though, things are getting more difficult and worse. We were told that all this cutting of the spending is going to make debt accumulate more slowly. We're seeing the debt clock still explode, the national debt exploding higher, consumer debt still exploding higher. Things not getting easier, folks. So let's get into some news that's just going to kind of underpin what we're talking about here and just prove it here. Starting right here with cars. The U.S. car index, the car price index, jumped to its highest level since 2023. And yes, car prices are actually starting to rise, beginning to rise. We've showed the chart here over the past few months, what's happening with the Manheim Used Vehicle Index. But let's take a look at this. This is out of MSN. The past few months have been hard on those looking for a new and used ride. Used car prices racked up nearly 4.9% year over year for the month of April. So April this year to April of 2024, up nearly 5%. And that's according to Cox Automotive's Manheim Used Vehicle Index. So this is the latest. This was after being up by 2.7% from March versus the previous month. So in March, compared to the previous March, 2.7%, but April compared to previous April, 4.9%. So folks, we're just getting warmed up. I think these prices are going to go even higher, unfortunately, and that's not what people need. People don't need higher prices. Obviously, the reason people are in so much debt, besides having bad spending habits, is people, things are just too expensive. And what I've talked with a friend of mine about here recently was, why do people that don't hardly have anything in savings, anything invested, anything hardly at all as far as assets, why do they just go out and spend the money on things that really don't give them anything for the long term? Vacations, right? Concerts, sporting events. And what we came to the conclusion was, people are just trying to fill the void, right? And people question me. They say, Jay, if the economy is so bad, and it's not bad, it's just based on debt is what I'm saying. The economy is gauged on how much money people are spending. So as long as you can give money to people or give them credit and then have them go spend it and take on debt, the economy is going to look like it's doing good, right? So the economy looks like it's doing good on paper, but in reality, it's based on debt, and the American people are buried in debt. But these people, I think they're filling a void, because if you can't afford a house, you can't afford, a lot of the things that people would like long term, like a house, a place to live. You're just going to go do other things. Oh, look, I took a vacation. Look at me. Oh, look, I'm at a concert. Look at me. Look, I'm at a NBA basketball game that I paid. What's the tickets now for playoffs? Depending on your city, I've seen anywhere from like $200 to like $1,000, depending on your seats. Look at me. I'm at the playoff game. People are filling that void, I think. Instead of building long-term wealth, they're just, I think, short-term, having short-term fun, entertainment, stuff like that here. But I think that's what's going on, folks, as far as the big picture on why you still see so many people out spending money every time you go out. And I'll give you another example. This was pretty interesting. There's a person on YouTube. His name is Life with EB. He's a tow truck driver, and he's not just towing people on the side of the road broken down. He's repossessing cars. So repo driver, that's the word. And he's got a YouTube channel, Life with EB, if you want to check it out. But this is just something I saw today that backs up what I just said about people spending money that really shouldn't be. Here was a repossession. I'll bring it up here so you could see it. a repossession of this, what is that, a Jeep? And they were in there shopping. And I think they were shopping at some hair care place because they were talking about, they had bags of stuff. But when they came out and the tow truck driver was there repoing their car because they were behind on their car payment. Right? So think about that. You have people shopping for hair care products and they are not paying their car payment, right? So that just shows you the priority of, I think, so many people. And it's interesting, the videos that I saw of this guy doing the towing, every time I saw him try to take a car from a parking lot, the people would come out during the repossession. So he didn't get out of it easy. They were yelling at him and trying to hold on to the car and trying to run along the side of the car as the tow truck was taking their vehicle away. So pretty interesting channel. Check that out if you find that sort of thing interesting. But to tie it in with the economy and spending, yes, people are spending money, and when people spend money, the economy looks good. It looks like it's growing because economic growth, is based on people spending money. So the more money people can borrow, the more the economy is going to look like it's doing good. But in the background, you have a lot of debt, and now we're seeing an escalation of this. And prices getting higher as well. And the debt storm is about to begin because now we have the student loans that are coming due. Not just coming due, they've been past due for years. But ever since 2020, they've had, the borrowers have had a break. They've been given a break and they've been given a pause. But now the debt and the late loans are being counted towards their credit scores. Credit scores, folks, are tanking. And this is just not a few million people, folks. 40 plus million people are having to pay back their student loans now. This is a big chunk of the American consumer right there. And it's pretty interesting the way that it's being reported. Sorry, I had the hiccups before I started this video, and the only way I can stop the hiccups is drinking carbonated beverage. Take a drink of my Poppy right here. This company, Poppy, just got bought out, so I'm hoping they're going to stay healthy. They got bought out by a much bigger company. Hopefully the drink will stay healthy. It's sort of like a healthier type of soda, probiotics and stuff like that. Anyways, we are being told that consumers are getting ahead, paying down their credit cards. But yet, just in the past few weeks, we see news like this. Late credit card payments have hit a record high. And then this article out of CNBC goes on to tell you how to pay off debt consolidation, stuff like that, balance transfers. But yeah, record high. Late credit card payments, record high. Not just the highest since 2008, the financial crisis, record high. So worse than the financial crisis right now. And we're being told by some people, some entities, that everything is getting better and that people are doing better than before and that everything's on the right trajectory. You just have to wait a little bit longer. Wait a little bit longer for what? For things to get worse? Because things have just gotten worse as we continue to progress here. Not for most people, or not for all people, I should say. For most people, yes, things are getting worse as far as the debt to the amount of savings they have. There's still that group, though, that's still doing very well. The people at the top 10%, the billionaires, the owners, the CEOs of these mega companies making lots of money. And yes, there is price gouging going on. We just talked about Walmart in our previous video. They're still making a lot of profits, but yet they're saying they're going to have to pass the cost of the tariffs along to the customer. And there's kind of a battle going on right now between the current administration and Walmart. All right, so basically you've got the ones in power right now trying to make the economy look as good as possible, not wanting prices to rise, but yet what they're doing is causing prices to rise, right? And that's the tariffs. And it's also the monetary system, right? And the financial system that we have. That's what's causing the prices to be too high. That's what's causing the cost of living to go high. So until they address the underlying causes, they're really not going to stop prices from remaining high. They're not going to bring down the cost of living, right? And another thing, the CPI, Consumer Price Index, went up by the lowest that we've seen in several years, but it still went up. What does that mean? That means prices that are already too high, cost of living that's already too high, it's getting higher. It's getting higher at a slower pace versus previously, but it's still getting higher, folks. And also, take a look at this. U.S., in this case, the New York Manufacturing Activity contracts for a third month. Does that seem like it's getting better? Contracts for a third month. And we were told that manufacturing is going to come back. And I've got some people telling me, just wait, things are going to get better. Things are going to get better, folks. Do you really think manufacturing is going to come back on a large scale when the U.S. has one of the highest costs of living in the world? Our company is going to want to come back to the U.S. and set up shop in the U.S. only to pay wages that are much higher than they are in other countries, sometimes 2, 3, 4, 5 times higher, and even worse compared to some countries. Our companies going to want to do that, or they're going to want to come back to this country to pay higher wages than they would have in the other countries. Well, they could do that to get out of tariffs, but do you think that's going to be what's going to be happening, right? If you ran a big company, knowing that all this could be changed in 4 years when a new administration comes in, would you want to set up shop in the U.S., bring manufacturing back to the U.S., which could take years just to open up a manufacturing facility? Would you want to do that? I mean, let me know down in the comments. I would say that it's a big into the O on that one. Manufacturing activity hits a 5-month low on the tariffs. They're leaving businesses in a state of paralysis, but it's also affecting China. This is out of The Guardian. Manufacturing activity plummets amid the tariff war, punishing tariffs that reached 145% on many Chinese products back in April are starting to take their toll, even though they've been lowered, they've been decreased temporarily. But we'll see. You know, I think ultimately they're going to have to back off these tariffs because it's causing too much manufacturing activity to slow down on both ends in the U.S. And overseas. And you would think that higher tariffs would increase the manufacturing here in the U.S. with companies trying to create more on U.S. soil to get around the higher costs of importing. Well, so far that's not happening, and maybe it'll happen. Maybe I'm not giving it enough time, and I can see that argument as well. I mean, when you see new policies introduced and get implemented, the lag time is usually between like 12 to 18 months before you start seeing it show up in the economy. So we'll give it more time. We're not going to be a complete Debbie Downer here, or Danny Downer. Because, sometimes you do have to give it more time. But so far, things look like they're just getting more difficult for most people, but hopefully not for us here, because what do? We invest, we look for opportunities, and we try to use all this information to our benefit. And in fact, I just made a small stock purchase recently, and this was a kind of a dip buy. Let me just bring up a chart here. Some of you may not like the company, but you got to admit, this company is very in demand. Let me show you. All right, and keep in mind, this is just a small purchase. I'm not very heavily invested in the stock market. I think now is the time to be kind of cautious on everything that's been going on, the new administration and everything else that's been a lot of changes happening right now. But I bought a dip buy, what I think is going to be a dip buy, hopefully, and it is Starbucks, folks. This stock dropped from, it was up as high as 115. Now it's down to $85.57. So, but I think it's going to be a dip buy. I think it's going to go back up well over $100. And if it does go up, I'll sell some off and take some profits here. But that's the kind of thing, folks, that I think most people just have to do now with the cost of living. If you're not investing, I've said this before, but I don't know how some people get by that aren't investing unless you have a real low overhead lifestyle, right? I know a lot of people that are retired. Actually, a friend of mine just retired, and he was in the Coast Guard. So he has very good benefits. He only has one kid. He's not married anymore, so he doesn't have a lot of need to go out and, fancy dinners and stuff like that. So he's kind of a stay-at-home person. He goes fishing a lot, and he's loving his life. He's fishing, he's working out, getting in great shape, even though he's in his early 50s, and he's loving his life, And that's an example of how you can still live a good, happy life. Even people that are in debt, they can be happy. I mean, nothing wrong with that. I mean, debt's not, stabbing you in the side. It's not causing you pain, but it is something that, if you think about a lot, it kind of makes you worry, especially if you don't have anything saved up for the long term. But back to my friend who retired from the Coast Guard, he owns his home now. He paid off his home, so he gets very good benefits. And he's always lived kind of a low cost lifestyle. He lives in South Carolina. When he bought his home prices were very, very cheap in that state, in his area. So people are doing good. I'm not out here saying everybody's doing bad, but when you look at the big picture, most people are getting deeper in debt and getting anxiety over it. I mean, we showed you the studies, the surveys, economic anxiety increasing. Capital One just acquired Discover. So Discover Card is now going to be owned by Capital One. More mergers, more acquisitions, consolidation. Capital One Financial announced it's completed the acquisition of Discover. This deal brings together two innovative, mission-driven companies. So you may not see it. It's probably going to be like a white label thing where they'll still say Discover, but they're going to be just in the background owned by Capital One. They announced they intended to enter a definitive agreement to acquire Discover. Is it a good thing? Is it a bad thing? Typically, big companies merging gives you less choice. It gives you, less chances to go and find better deals, so to speak, right? So we'll see how this plays out, though. Credit card merger. Oh, but back to Starbucks for a minute. I rarely even go to Starbucks. Sometimes, like, my wife will get a deal on her app where it's like buy one, get one free. Some cases we'll do that, but otherwise I don't like paying that much for coffee. And even when I get a buy one, get one free, it's like a plain coffee with a little bit of milk or something like that. But the reason I think that's a good long-term play is people are hooked on coffee. There's people out there, I know people that have to drink multiple coffees a day just to keep going through the day because so many people are hooked on caffeine. They're not getting enough sleep and working multiple jobs. They're tired. They're stressed out. So caffeine is that boost. And just the drink itself is a kind of a mental boost for people that are having a hard time, in my opinion. So I think the company is still going to be good long term. And if the stock drops more, I love it. I'll lose a little bit on my current investment, but then you buy more. That's why you try to have cash on the side. If you go all in and then the stock drops, you're stuck. But if you just invest a little bit, especially when you think the market's overvalued and in a bubble like I think it is right now, I think most stocks are way overvalued right now. But in the big picture, if you have money on the side, more money on the side than you have invested, then even if the markets come down, you're still happy because you're buying low. And if you're all in, you don't have money to buy low. You see what I'm saying? So it's all about how you invest as far as how leveraged you want to be, how much risk you want to take on, right? I'm taking on very low risk right now, even though I'm buying here and there. Very low risk. That's me. What do you think about this? Let me know what you think down in comments. The rising car prices, the highest level now in several years. The debt keeps rising. Credit card delinquencies rising. Student loans now are going to become due, affecting people's credit scores. Where does it go from here, folks? I think you know my opinion. Let me know what you think down in comments, and I'll be reading. Everybody keep stacking. Bye for now. Peace.